G'day folks, welcome back to another update for natural gas. Now we've had a gap down over the weekend and it's due to extreme weather. We'll go through that in a minute. Make sure you hit that like and subscribe button to support the channel. In terms of the outlook, as of today, February 24th, natural gas prices have experienced significant volatility due to a combination of factors. Cold weather, severe winter storms have increased heating demand, with forecasts predicting extreme cold affecting up to 80 million people across the US. Supply constraints, freeze-offs in production areas have reduced output, tightening supply and contributing to price spikes. Geopolitical tensions, ongoing conflicts such as the Russia-Ukraine situation have disrupted energy markets, leading to heightened supply concerns. Increased LNG exports, rising liquefied natural gas exports have further strained domestic supplies, influencing price dynamics. AI data center demand, the growing energy requirements of AI data centers have added to the overall demand for natural gas, as these facilities often rely on natural gas-powered electricity. And the overnight price spike can be attributed primarily to the sudden onset of extreme weather, which sharply increased heating demand and led to supply disruptions due to freeze-offs in key production regions. So we always look at the long-term trends first. We've got the monthly, the weekly, and the daily. And for those new to the channel, we've got the moving averages on both the price chart and the CCI 150, and they're available in the description below if you want to reference that video to learn how to draw them on your own charts. So on the monthly, first off, the price is still bullish above the moving averages, likewise the CCI. So that's a bullish momentum. And we always trade in the direction of the higher time frames. If you're trading on the weekly, you always go in the direction of the monthly. If you're trading on the daily, go in the direction of the weekly, and so on. On the weekly, it's also been bullish, and it's been that way since around September 2024. It's been bouncing off that moving average off the CCI, and still very bullish at the moment on the price chart as well. Had a bit of a dip into that moving average back then in late January, but it's bounced out of there quite strongly. Now on the daily, it's also bullish, but notice the CCI is coming back and pulling back towards that moving average, which is a weakening sign. Plus we had a gap down over the weekend, as I said, because of the cold weather. But again, bullish on all three time frames, but just be cautious. We might be starting to see a bit of a retrace into this moving average range on the daily. And we always look at the intraday charts to look at the micro level, see if what's influencing it. So again, just be cautious. It's still bullish on the daily, but just be cautious. It looks like we did have here back during this period, we projected a bearish divergence, double top on the CCI versus higher highs in the price. Hit that resistance at 43.64 and it fell off, hit our target area. That target area, again for those new to the channel, is a Fibonacci retrace. Goes back to that significant low before the divergence started, and that's a 23.38% retrace level. And it bounced out of there, came close to hitting that resistance again, and then it gapped down over the weekend. And currently on the hourly chart, we're in a bearish momentum with the CCI below its moving average. Likewise, the price is broken below on the hourly as well, so just be cautious. I'd like to see this break higher, obviously, in which case we should see it bounce off that moving average range. Otherwise, if it keeps dropping, then we're going to see it break into that moving average range, giving us a neutral signal on the daily. Now, there's no, currently there's no, you could also argue there was a bearish divergence there, higher highs on the price, and you look at these peaks, lower highs on the CCI, that was a bearish divergence as well. You can see there, if I drew a Fibonacci between that range, that fell well below 100% retrace. So always pay attention to divergence, no matter how small they are. So this is BOIL. On the monthly, there's no CCI for it, but you can see there it's approaching the moving average range. Still bearish, but a slight bullish move currently this month. On the weekly, we had this bullish divergence on the CCI versus lower lows on the price, and that actually bounced up through that moving average range and still making further upside on the weekly. On the daily, it's actually come up and hit that resistance twice now at 96.80. But notice the CCI and the price are well above their respective moving averages. So looking kind of strong at the moment, but let's look at the intraday, the 1 hour chart, seeing what that's telling us. So again, we go predominantly long during this period if you're trading on the intraday, and you would have taken some of these long entries. And you always pay attention to these divergence. There was one back here, pulled back, hit our minimum target range. And at the moment, you could argue that was a little double top on the CCI. That's slightly higher, so let's keep it strict. But then you've got another bearish divergence here on the CCI, lower highs on the CCI versus a double top on the price. That's a bearish divergence. And if I was to draw a Fibonacci retrace, we take it back to the more recent significant low, and you could pull it back to almost any one of these, but let's pull it back to this area here. So we might see it fall into this area as a minimum retrace. So if we draw that between that 23-38% level, we may see the price, if the CCI keeps dropping on the hourly, we may see the price drop into that area. Now it's already broken below the moving average of the hourly CCI, and it's in the middle of that moving average range on the price. So again, early days, but notice we're still bullish on the daily, so we don't take short trades, and I avoid trading these because I'll use them as a potential area not to enter. If I'm going long, this is just another warning sign to avoid going long until we see the divergence invalidated. Next we look at KOLD. Now on the monthly, it's broken below the moving average range, giving us a bearish signal. There's no CCI for it on the monthly. On the weekly, it's been very bearish, a strong bearish downtrend on both the price and the CCI, and it's still declining. No sign of a pullback yet on the weekly. On the daily, if I zoom out, you can see there it hit the support at 1979. It's hit it on 3 bars now on the daily, and I've got this bullish divergence. Higher lows on the CCI versus lower lows on the price, and I've already drawn a target area for this on our last video, and that's a minimum retrace level potentially. And for this to work, we need to see the CCI rise from where it is at the moment into a more bullish mode, and by that stage we should see the price also rise. Now if it doesn't rise, we could also see the CCI keep dropping, in which case it'll invalidate the divergence, or alternatively the price may drop and the CCI can start rising, and that'll still be a bullish divergence. So we'll play it one day at a time. But at the moment on the daily, bearish trend, but notice we've got a bullish divergence. And now on the 1 hour time frame, on the intraday, taking predominantly short trades only, you would have taken some short trades back here. But again, notice here we had on it before our last video, we've got a bullish divergence and the CCI is still rising. And we measured it from there, and that's actually hit it twice, double bottom on the price at 1979. Hasn't quite hit our minimum target range yet, but that CCI is still rising on the 1 hour chart, and the price is also likewise making further upside as well, so just be cautious. Again, we normally trade in the direction of the higher time frame. We normally go short, and you would have profited from some of these little trades back here. I like to close it out when the CCI breaks into that moving average range and open the trade when it breaks out of that moving average range. So it would have been a nice little trade on that one. That one would have been another little good trade there. Another one there, and you close it out there. So at the moment, avoid going short or long until we see more definitive movement long to on the daily to turn long, or for the hourly to turn more to the downside and continue shorts. So for UNG on the monthly, the price is still in that moving average range, just slowly trickling its way above that moving average range. On the CCI, it's well above the very narrow moving average range. So bullish to neutral movement on the monthly. On the weekly, we did have this bullish divergence, and that's still rising on the CCI, and that's eventually broken out to the upside on the price chart as well, with this bullish divergence with lower lows on the price. And on the daily, again, you can see there the price is made further upside. It bounced off this resistance here at 22.72. It's the second time it's hit it, but notice the CCI is still bullish on the daily chart. If we go to the intraday chart, see what this is showing us. We did draw this bearish or double top on the CCI versus higher highs on the price, and we projected a break to the downside. Now it actually did break down slightly, but if we were to draw a Fibonacci retrace, we'll go from that high to that low. We expect it to hit, assuming the price does pull back. It could always keep rising, of course. We expect it to hit this 23-38% minimum retrace. Notice the CCI on the hourly is still dropping, and that price has also dropped and broken into that moving average range. But again, avoid going short until we see the daily break to the downside as well. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.